You've got the institutional side of crypto, and we believe that institutions, their go-to, the first, is Coinbase. It's the most robust platform, and it's got the most liquidity on it. And so we think the scaling opportunities, given what we think is going to happen to Bitcoin. Now, as you may know, Bitcoin today is around $44,000 per Bitcoin. We see that scaling to $1 million by 2030 or more. For all kinds of reasons, not just store of value, not just the payments, what do you call those?
Cross-border payments?
Cross-border payments, but remittances,
yeah,
not just that. But institutional investors, insurance policies that high net worth individuals take out so that their wealth won't be confiscated, like we're seeing more and more often these days, and a substitute for money in emerging markets where they can't trust their monetary regimes or their fiscal regimes. So we see an incredible number of use cases, and we think Bitcoin will be leading the charge in many of them.
Bitcoin is not performing up to the mark in the recent weeks. The leading crypto has fallen below $41,000, and it seems the sugar rush from the 2022 Bitcoin conference is finally over. Despite the obvious crashes, many people are still highly bullish on Bitcoin, especially the long-term holders. In fact, many crypto enthusiasts believe that Bitcoin will hit new all-time highs in 2022. So when will Bitcoin hit $1 million per coin? Let's hear it from Cathie Wood. Hello and welcome to Money Talks. In today's video, ARK Invest CEO Cathie Wood addresses the potential for Bitcoin hitting $1 million, the future of crypto regulation in the US, and the widespread institutional adoption of Bitcoin. Cathie Wood also speaks about the underperformance of ARK Invest and why she is immensely optimistic about Bitcoin. So without wasting any time, let's dive right into the video.
Well, what we're seeing is 180 degrees different today than it was a year ago when Janet Yellen, it was roughly a year ago, Janet Yellen said, Bitcoin, environmental problems, illicit activity, money laundering, gambling, all of that. And she just, door shut. And I remember I was asked at the time, and I basically said, she hasn't studied it. She hasn't studied the technology, and she hasn't studied the instrument, the new asset class. Well, it seems like she's been boning up because, again, just the other day, she focused on Bitcoin and crypto generally as, we need to make sure and encourage financial innovation. The US wants to lead, just as it has with many other innovation cycles. And I said to Yassine El-Mandra, our crypto analyst, I said, who's whispering in her ear? Because we began to hear other policymakers on both sides of the aisle talk in this way. And in talking to Michael Saylor earlier, he thinks it's Gary Gensler. Gary understands Bitcoin. He taught about it at MIT before he became chairman of the SEC, and he understands how profound this innovation is. First, global, private, meaning non-government, but it is open source, so public in that sense. Digital, rules-based monetary system ever. So it's a very big idea, and we do not want to be left behind. We were the first public asset manager to gain exposure to Bitcoin in 2015 when it was $250. I think today it's $44,000, and we think it's just begun. But I don't think most institutional investors are positioned the way they ultimately will be. A lot of retail has really led the charge here. They, like with our other funds, the retail investor, the individual investor, those people with one foot in the new world, they get what we do. They get Bitcoin. So I think institutions are coming along slowly.
What are you seeing as far as the differences in retail investors in your ARK ETFs and some of the institutional investors when it comes to conversations about performance and long-term views and strategies? Talk about those differences.
Well, okay, so most of our investor base has been retail, but we have been cultivating institutional relationships for the past 3 to 5 years. We do have institutional investors, but so we have 2 conversations. For the retail investor who's been with us, who really does believe that we're onto something, that innovation is going to disrupt every sector out there, and they want to be on the right side of change, we have educated them. We have a 5-year investment time horizon. Everything we do, keep your eye on the prize, average down if you can, and usually that sort of disciplined behavior will work out over time. Investor who has been attracted to our strategies is a younger investor. I'll say it's across the spectrum, but the younger investors and the older investors who take us seriously about our 5-year investment time horizon, they're fine, because if you look at the past 5 years, we have outperformed NASDAQ, S&P, while I don't know what the number is, 75 to 80% of truly active managers have not. So we have that as a calling card, and we have a 5-year investment time horizon. We also give away our research. This is why we're investing in this space. And now we're playing more of a ground game, I would say. We're going to be publishing more of our models. So Tesla, we will put that update on GitHub next Monday, and we'll be tweeting, and our analysts will be doing videos so that our investors can understand the depth of knowledge that our analysts have, beyond the depth of knowledge, I think, of any other analyst in these technologies. The reason for that is we have organized our research teams by technology. There are 5 major platforms involving 14 technologies that are cutting across sectors. So they're technology specialists, and they are sector generalists. We think that's the right way to think about innovation. Again, many people think monetary policies around the world have been unhinged, especially since 08-09, and they're seeing extreme increases in the monetary base, various monetary bases around the world. So Bitcoin is a hedge against inflation. Now, that will turn into inflation if the reserves on central bank balance sheets, which are the kindling for inflation, if they're lit. And that means if bank loans go crazy to the upside. We're seeing a share shift when it comes to loans into DeFi. So, there's a big, I think the banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent. And they're losing business to DeFi. Lending and saving, a lot of it is taking place in DeFi right now. I think that Block's singular focus on Bitcoin is critical here. This is how Bitcoin's going to proliferate around the world. And the second layer solution, which is the Lightning Network on top of the base layer, has been in test mode for years now. And, one issue after another, but it seems as though the second layer solution has become more robust now and is ready for prime time. I think that was part of the announcement, direct deposit into the Lightning Network, taking away a lot of the friction in the user interface. So I think this could be big. Last year, Lightning, the number of channels on the Lightning Network almost tripled. I think a lot of that was El Salvador and maybe some of the other trouble spots around the world. This is going to bring the US, I think. I think the number of channels is going to explode, and my guess is the number of developers developing to this platform is also going to explode. Well, I think, if you look at the activity within Bitcoin, you'll see the percentage of long-term holders is roughly 70%, so 13.5 million Bitcoin out of the 19 out there. So long-term, 70%. And that is very different behavior from what we're seeing in the equity markets. Bunch of high-frequency trading, short-term holders. They're doing timing, not time, and we think that's a mistake, long run. So I think when we move out of this period of downside volatility, We think the private market valuations are more correct than the public market valuations, and that there will be a closing of that gap in here. I think the time horizons will lengthen. That's what always happens in risk on. Now the time horizons have collapsed. So it's just an equity versus Bitcoin ethos right now.
Renowned money manager Cathie Wood, chief executive of ARK Investment Management, remains one of Bitcoin's biggest evangelists. As you've seen, Cathie Wood has forecasted that Bitcoin will reach $1 million by 2030. Although in recent weeks, Bitcoin prices have fallen to below $41,000 on many occasions and subsequently failed to make meaningful gains. Cathie Wood also relayed the high-level prognosis from her company's Big Ideas 2022 report during her Miami appearance. This contained the cryptocurrency's lofty price target. Wood referred to the world's most valuable cryptocurrency as a hedge strategy against inflation. She omitted, however, to note that the digital asset has fallen 27% in value over the last year, while inflation has soared. Consumer prices have increased by about 8% in the 12 months to February of this year. Wood's projection would imply a 25-fold gain in the BTC's recent price of $38,094. Wood noted that 70% of crypto investors keep their positions for the long term, which equates to approximately 13.6 million units out of over 20 million units of the cryptocurrency. So, do you agree with Cathie Wood's $1 million Bitcoin prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.